Ladies and gentlemen, the markets are finally coming to realize that a recession is not coming. We're already in a recession, and the markets are now starting to price in the possibility of a depression. This is an urgent update. We're going to go over what's happening with cryptocurrency. They're completely collapsing. Withdrawals are being cancelled. Stocks are falling. Bonds are falling. Gold and silver is falling. We're in a complete liquidity crisis. And people, if you haven't been paying attention, it is definitely time to start paying attention right now. Because like I've been warning, this recession is going to be one of the most painful we have ever felt. And if you don't act now, you will be left behind and it'll be far, far too late to prepare a month or 2 months from now. So everyone, we got a lot to get into. Let's not waste any time. Let's get straight into the news, the facts, and the data. Well, look at this, everyone. Bitcoin and cryptocurrency is completely crashing right now. Bitcoin has fallen to a new low of $23,800. But look at this, the altcoins, they're getting completely destroyed. Ethereum is now down to $1,200. And we're seeing many of the other altcoins fall to new lows since their recent all-time highs. Look at this, Dogecoin, 5.5 cents. I really do feel sorry for that Dogecoin millionaire. He's lost pretty much all that $2.5 million of his portfolio by being greedy, hoping it'll go to $1. And we can see here the pre-market, the Dow is down around 600 points, the S&P is down around 2.5%, and the Nasdaq's down around 3%. So it's looking like today the S&P will officially enter a bear market of down 20%. But people, if you're thinking this is a buy the dip opportunity, I do have a warning for you. And let's go over what is causing this crash right now. Well, everyone, the house of cards is finally starting to collapse. And we're seeing a lot of these scam cryptocurrencies, all these platforms that have promised the world or have said, you know, we're going to change the world with all this new technology. Really, it's all just empty promises. And we're seeing these projects finally collapse now. Look at this, big crypto lender Celsius freezes all account withdrawals. And if you think Celsius is going to be the only platform doing this, I think we're going to see many more cryptocurrency platforms go under. Because you know why? We've never had a cryptocurrency bear market when the economy has also been in a recession, and a real recession, not like 2020 when that was an artificial recession because they just locked down the country and then they printed heaps of money and we had this V-shaped recovery. I'm talking about a real recession and one that doesn't recover quickly. Because cryptocurrency hasn't been around that long. It was created in 2009 and didn't really become mainstream or gain much investor interest till 2013. And we've had two bear markets or 2 4-year cycles since then, but we've always had a bear market when the economy has been doing relatively okay and the stock market has been going up and we've been in a broader economic boom or asset boom. So this is going to be the biggest test for cryptocurrencies to see what exactly does cryptocurrency do when it's in a bear market, and also if we do enter a deep recession. Because do you think people are going to hodl their Bitcoin or hodl their doggy coin, when they lose their job or when they can't afford the grocery bill, when they can't afford to put gas in their car? People, they're not going to diamond hand, they're not going to hodl. Even if they want to hodl or want to diamond hand, they're going to be forced to sell. And during the last bear market, Bitcoin fell around 85%. And again, that was when the economy wasn't in a recession. So even if we do just have the same correction in Bitcoin as we saw during the last cycle in 2017, where it fell from around 20,000 to around 3,000, well, we could still see Bitcoin fall around between anywhere of $13,000 to $15,000. So again, even though while it is cheap and we don't know exactly what is going to happen because cryptocurrency is so unpredictable, because it is a new asset class, we still could have much further to fall. Because people, we've just got some new critical data that shows us we are already in a recession, and this is the worst ever data we've ever seen. This is not me exaggerating. Let's have a look at this. Listen to this, people. US consumer sentiment slumped to a record low on rampant inflation. And people, these records go back to 1980. So this US consumer sentiment, it was meant to come in at 58. Guess what? It had a massive mammoth miss. It came in at 50. This is the lowest consumer sentiment we've ever seen since records began. This is worse than 2008, worse than the 2000 dot-com bubble, worse than the 90s recession. And you know what's really baffling me? The central bankers and the bankers and, the governments, the politicians, they're all saying the consumer is strong. The consumer has never been stronger. The economy is strong. It's never been stronger. Best economy ever. I don't know what they're smoking, people. They are completely delusional. Or maybe they're just hanging around their $1 million friends and they've seen their asset prices boom over the past year, which now they're going to crash. And, they're making millions of dollars and they're getting big pay rises. So maybe for them, things have never been better. And maybe for them, their balance sheets have never been better. But for the middle class, there is no middle class anymore. They are being completely wiped out by high groceries, high fuel, high rent, and with this new CPI that is the highest since the 1980s, guess what? What did they have to do in the 80s to get inflation down? They had to lift interest rates up to 18%. So if we've got the highest inflation since the 80s, what do you think the central bankers are going to have to do to get it under control? Newsflash, everyone, they're lying. There's no way they're going to stop at 3%. They're going to have to go to at least 8% to match inflation. And really what they should be doing is going above that to beat inflation, because also, again, they changed the way they record inflation in the 80s. And what's really hiding inflation right now is in the CPI, 32% of it is made up by rent. And you know how they calculate rent? They just go up to random homeowners that know nothing about the housing market and ask, what do you think you could rent this house for? Do you think people are going to know what fair value is or what market value is? And also a lot of these people that are renting homes right now, well, their rent hasn't gone up, but if all of a sudden someone new wants to move in, rents are going up 15, 20, 30% year over year. And the CPI is saying shelter costs are only up 5-6%. So this is why inflation is being severely underreported, and it's really more like 15 to 20%. Listen to this. University of Michigan June sentiment index tumbles to 50.2. Short and long-term consumer inflation expectations also climb. Because again, people, if you ask the average person on the street, they will say it already does feel like a recession. So what's this going to lead to? Well, everyone, it's looking like the Federal Reserve is going to have to get much more aggressive, and traders have now locked in to say that it is guaranteed that the Federal Reserve is going to have to do a 75 basis point hike. And people, they are far, far behind the curve. Really what they should be doing is 1% interest rate hikes, and not just one, multiple, because they've still only got the federal funds rate at 0.75 to 1% when inflation is at 9%, or should I say CPI, and real inflation at 15%. This is doing nothing, and this is only making the problem worse. And this is why I was saying 6 months, a year ago, that the Federal Reserve needs to start lifting interest rates now, or back then, before inflation gets out of control. Otherwise, they're going to have to be much, much more aggressive. And it's looking like they are going to have to get much, much more aggressive because they're continually falling behind the curve. But what has been the most reliable indicator of a recession? Well, everyone, what that is the yield curve. That is when interest rates for the 2-year US Treasury or short-term interest rates go above longer-term interest rates, the 10-year US Treasury yield. Now, the 2 and 10-year US Treasury yield inverted in April, and people saying, look, that's just a fluke. It doesn't mean there's going to be a recession. Well, guess what? It just inverted again. Listen to this. 2-year Treasury yields briefly topped 10-year rate, its first inversion since early April. And we can see here, interest rates are rising. This is going to be very, very bad for mortgages. Mortgage rates are going to be going up. And again, people, just give it a few months, we're going to start to see house prices fall significantly. The 10-year is now at 3.233%. And if we go to FTX here, while I'm watching it live, we can see here, Bitcoin did hit a low of $23,700. And people, I thought I'd just add in a bit of comedy here too. Listen to what Ben Bernanke, the famous central banker of 2008, the Federal Reserve chair that was in 2008. Listen to what he's saying now. Listen to this, people. Bernanke says Fed can sidestep big recession in inflation fight. Fed's softish landing. Remember, people, it's gone from inflation's transitory to it's no longer transitory to inflation's getting out of control to we will start lifting interest rates, but don't worry, there won't be, any consequences to there will just probably be a soft landing. And now they're saying, no, it's going to be a soft-ish landing. I just love the words that they come up with or the excuses they try to come up with to try to not scare the people, or they always try to keep the public in the dark to what's really going to be happening. When they say softish landing, what they're saying is there's going to be a recession. And he says that economists are bad at predicting recessions, which I do agree with. Again, people, the reason why they say this is because they have to say it. The central bankers have to say the economy is strong. Governments have to say the economy is strong. Because if they admit that a recession is coming, it will become a self-fulfilling prophecy and a recession will come because the masses or the middle class will listen to the government, they'll listen to the central bank, and then they'll stop spending, and it will actually create a recession by them saying or trying to warn people that one is coming. So they'll keep saying right up to the day before the recession is announced that don't worry people, nothing to fear, keep spending, keep taking on debt, there's nothing to worry about. As well as all these talking heads on CNBC, all these stock gurus, these stock pickers, they're going to tell you to keep on buying because they make money from you buying on their platforms. So what you're probably wanting to know is, okay, what does all this mean for you in simple terms? Well, what this means, everyone, the crash that I've been trying to warn about, it is happening now. And even though what looks like great buying opportunities now, I think we do still have a significant way to go. I think the markets haven't priced in a deep recession. They're trying to price in higher interest rates. Maybe they're trying to price in a small recession. But I think, like I said in my last video, this is going to be a great recession, or it could be the greatest depression of our lifetime if the Federal Reserve does lift interest rates up to 8 or 9%, if inflation doesn't go down. And also we do have more shortages, also with more geopolitical issues with the US, China, Taiwan, Russia, Ukraine, etc. Other countries becoming more authoritarian and more aggressive to the West. And once we see consumers start to default on all these debts when they can't keep up with the cost of living. So everyone, what I'm doing, I'm just hoarding cash right now. I'm preparing, buying extra things, the essentials that you need. Look around your house to see what the essentials you need because it's going to be more shortages. Prices are going to keep getting higher. So if you can, buy it now. Get extra stores now because a lot of all these preppers were called crazy a couple of years ago. Well, they're looking like geniuses right now. And the good news is for those that have been preparing and that are preparing right now, there's going to be absolutely amazing buying opportunities for houses, for stocks. And if Bitcoin falls, to $13,000, $10,000, and hey, it could fall even lower, there'll be more great buying opportunities across all asset classes coming soon. So everyone, that was just a quick update with what's happening in the markets right now. Things are definitely getting very, very interesting. What do you think? Let me know. Now, for all my loyal viewers and subscribers still watching, I just want to say thank you so much for your support on my previous video. It really did help me a lot by seeing you all supporting me so much, by putting in your positive comments. It really did make me feel much, much better. I don't know what I do to deserve such a great audience, such great subscribers, such a great community here. I love you all, and I'll see you all in the next video.